There's a huge difference between a spouse and a teammate. A lot of couples get married thinking it's all about companionship. But what if it could be your single most powerful financial strategy? Today, we're going to break down how some couples are literally turning their marriage into a wealth-building machine. And they're doing it by adopting a totally different mindset. So let's dive in and see how it works. So first up, experts say that most partnerships fall into one of two buckets. On one side, you've got what they call the roommate model. Yeah, you share a house, you split the bills, you share your life, but financially, you're basically two separate people operating under one roof. But then, there's the teammate model. This is totally different. This is where two people act as one unified force, not just sharing life, but actively building a legacy together with a single shared financial mission. And this quote just nails it, doesn't it? Love builds a home, but teamwork builds an empire. It perfectly captures the idea. Look, affection is the foundation, of course it is, but it's the strategic alignment, that teamwork, that really builds significant generational wealth. It's about shifting from just living together to creating an empire together. Okay, so to really understand how this works, we first have to completely reframe how we think about the financial world we live in, specifically how we look at the tax system. Forget thinking about it as rules. You need to start seeing it as incentives. Think about it. When most of us hear tax code, we think of penalties, things we have to do to avoid getting in trouble. But here's the secret. The wealthy see it in a completely different light. To them, it's an incentive system. The government literally writes the code to encourage certain behaviors that it thinks will help the economy. It's not about punishing you. It's about rewarding you for doing very specific things. And this chart just lays out the two different realities so clearly. On one side, you've got your W-2 employee. You're trading your time for money, you have almost no control over your taxes, and your deductions are, well, they're pretty limited. But on the other side, you have the business owner or the investor. They get income from assets and systems. They have vast, flexible deductions, and they have so much more control over when and how they're taxed. The system just wasn't built to prioritize employees. So what are these activities the government actually wants to reward you for? Well, they're things like providing housing, which means real estate, creating jobs, which means owning a business, and investing capital back into the economy. When you do these things, you are literally playing the game the way the creators of the tax code designed it to be played. All right, so now we get to the really good part. How do you leverage this entire system within a marriage? Well, this brings us to the core mechanism, a seriously powerful strategy that lets one household play on both sides of the tax code at the same time. And this is the key question, right? How can you have one person earning a big W-2 salary, which normally gets taxed to death, while the family as a whole gets to benefit from all the massive deductions that are available to an investor? It sounds like it shouldn't be possible, but the answer is hidden inside a specific IRS designation. It's called Real Estate Professional Status, or REPS for short. Now this is super important. It's not a license you get, it's a tax classification. See, normally any losses from rental properties are considered passive, and you can only use them to offset other passive income. But if you get REPS, those same losses suddenly become non-passive. And that means you can use them to wipe out your active income from your regular job or your business. Now hold on, it's not exactly a walk in the park to qualify. It's a serious time commitment. You have to put in at least 750 hours a year, and that has to be more than half of your total working time. Plus, you have to be materially participating. That means you're actively managing the properties, not just sitting back and collecting a rent check. And this right here is the absolute game changer for married couples. Only one spouse needs to qualify on behalf of the entire household. This is what makes the whole teammate model possible. It lets you specialize. One partner can go all in on their high-paying career while the other goes all in on building the real estate portfolio. That's going to generate these incredible tax deductions for the whole family. It's the ultimate divide and conquer. So the whole strategy really just boils down to this simple but unbelievably powerful equation. You take the high income from one spouse and you subtract the real estate losses generated by the other. And the magic word here is losses. We're often talking about paper losses from stuff like depreciation. That's an expense that shows up on your tax forms, lowering your income, but it's not actual cash leaving your bank account. So you get this amazing tax break without actually losing money. Let's put some actual numbers on this, because this is where it gets crazy. Let's say one spouse earns $200,000. The other spouse gets rep status and generates $150,000 in real estate losses, mostly from that paper loss depreciation. Well, instead of paying taxes on 200 grand, your household now only pays taxes on $50,000. The amount of money you save is just staggering. Tens of thousands of dollars easily. But listen, this isn't just about a one-time trick to save on your taxes. No way. When you really get this system running, it becomes a self-sustaining engine, a flywheel for building wealth at a speed you wouldn't believe. Experts call it the wealth velocity cycle. Here's how it works. Step 1, one of you earns that high active income. Step 2, the other spouse shelters that income using those real estate losses. Step 3, and this is key, all that money you just saved on taxes, you don't spend it. You reinvest it as down payments on new properties. And then step 4, those new assets generate even more losses, which shelter even more income. And you just repeat the cycle over and over, compounding your wealth year after year. So after all this strategic planning, what's the real end game? What's the point? Well, it's about a fundamental shift in your entire mindset. You're moving from just earning an income to intentionally building a legacy. And that brings us right back to the relationship itself. Because when a couple is completely aligned on a powerful shared mission like this, it strengthens the bond in a way nothing else can. The act of building something so significant together, it turns that initial romance into a true, deep partnership. And that partnership is fueled by a purpose that's so much bigger than just paying the bills every month. Of course, to actually pull this off, you need more than a smart strategy. You need a rock-solid partnership. The couples who do this successfully, they define their roles early on, playing to each other's strengths. They communicate relentlessly about their vision, their goals, their tolerance for risk. They treat their finances like a business, using systems, not emotions. They're playing the long game, focused on a vision that spans decades. And they remember to celebrate the growth along the way, not just the numbers in the bank account, but their growth as people and as partners. So in the end, it all really boils down to this one question. Is your financial plan focused on just getting through the next few months, or is it designed to build wealth that will last for generations? Because making that mindset shift, well, that's the first real step in turning a partnership into an empire.